Why banking on your job income for financial long-term success is a terrible idea. Stay tuned for this week's episode of Prime Property. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property. So glad you could join me here today. Now, on every single week of Prime Property, I'm going to be talking about real estate, but on this episode, I'm going to call out why you shouldn't bank on your job for any type of financial success, whatever you deem success to be. See, I think we're all a byproduct of our parents, and when I immigrated here, I got the usual, immigrant story thing, which is, get a good job, get good grades, go to school, get good grades, get a good job, buy a house, pay off the house, and live the good life. See, I think my parents, and probably similar to yours, provide you the right advice for the right economic time back then. But this is actually terrible advice right now. But I was luckily enough, to get fired via email early in my career to let me rethink this whole process of what we've been sold as a kid. Let me break it down for you why our parents meant well, but it's terrible advice now. So going to school and getting good grades is great advice and still very valid now. However, school trains us to be a good employee. And while it's still the right thing to do, it's not the end all be all because there's many ways to learn right now with the internet, just like what you're doing right now on YouTube, right? Second, getting a job. A job is actually the problem right now because you're banking on someone to give you income while the value of money is going down right now and it's going to get you nowhere. And I want to get more into that in a little bit. And then the third thing, buy a house and pay it off, right? Well, group 3 and 4 together, right? So I agree with buying the house because it's a great asset, but paying it off makes 0 sense because when our parents, or my parents, were giving me this advice, interest rates were double digits. So paying off the house made so much sense because you're paying way too much interest. But in a world where mortgage rates are lower than inflation, why would you ever do that, right? You're basically losing money as a saver. And I'll get into that a little bit more afterwards as well. So you see, this is why some of the things we're all taught sometimes is not necessarily the best. And this is why I've been saying so much. You need to think critically about what the heck actually makes sense. See, if this is the type of real estate content you like, yes, quasi real estate, but not fully real estate, I'll get there, don't worry, that you enjoy, make sure you help us spread the knowledge by smashing that like button and subscribing to the Prime Private channel because every single week we talk about real estate content that is real, that matters the most to you because all this real talk is because we want to be transparent and honest, and by doing so, whenever you're ready to make a real estate move, whether it's investing or buying your home, you'll be like, oh, Zen, that guy, I'm going to schedule a call using the link here, which is www.chatzen.com to kind of strategize your future, right? That's why we're putting the content out there. But let's talk about the elephant in the room that everybody's reporting on right now. Inflation, or this metric everyone is using to measure inflation called CPI, which is Consumer Price Index. See, I want you to think critically again as to why we're basing our entire perception of the value of money and what we measure money in and how we're measuring it as it goes up in this arbitrary value or this metric called CPI. And how long is this transitory CPI? For me, transitory just sounds indefinite. It's like the basketball players say, they're out indefinitely. All of the central banks are reporting transitory inflation right now with CPI over 3%, blah, 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 right? Nobody explains what it means in layman's terms. Here's the truth from my perspective. It's propaganda because the government needs to hide the fact that we have to print our way out of this recession. That's it. We've talked about it before. Now, if this basket of goods, what CPI is measured, is actually up 3%, I would please tell me what grocery store they're shopping at because it clearly isn't reflecting in my grocery store. It's up way more than 3%. So while CPI is there, you have to understand that CPI is a manipulated metric because they could swap similar items, right? So if you swap steak for ground beef, then CPI stays kind of the same. Is it? 100% not to me, right? I can taste the difference. You see, if you're starting to question the CPI and the rate of inflation, let's talk about your job now. If you have a job and are lucky enough to even have inflation paid provided by your company where you get increase of 2% a year, fantastic. But what if inflation is allowed to run hot, like the central bank says? Then your money is being devalued even more. Now, if this inflation is measured in the CPI metric again, what exactly is this flawed metric? And why are we using it? Because if your inflation is higher than 2%, which is higher than your wage increase every single year, what's going to happen? That 3% increase in inflation is higher than your wage increase. That means you're losing 1% of your earnings every single year. While it may not sound like much, let's question CPI again and determine whether inflation is actually 3%. You see, everyone's version of inflation is different, right? Anyone who's trying to buy a home in the last year probably saw inflation of 25%, which is how much the prices on average went up. What if you're building a deck or a fence? I saw prices of a deck and a fence double, which is 100% inflation. That's more than 30. What about gas? It used to be $1.10 before a pandemic, and now it's like $1.40. That's more than 3% if you drive a car, right? You see, everyone's version of inflation is different, and that's why I'm air quoting this, because everyone's basket of goods is different depending on what your lifestyle is. It's going to vary. So why are we letting the government use this mandatory catch-all metric for measuring inflation? Imagine if you're a family, baby, car, condo, moving from a condo house. Do you think daycare, price of real estate, your grocery bill, and all that stuff is higher than 3% as it's gone up in the last year? I think so. This is exactly why CPI is a very flawed metric, and you can't rely on it nor your job to financially get ahead, because CPI is easily manipulated, right? The sooner you realize you can't rely on income for a long-term financial success, the better you're going to be, because it's not about like financial freedom that everyone's talking about or get rich, whatever, right? It's about keeping up with your quality of life, because the money that we're earning is going down in value. Here's an example. If you look at this average chart over here, it's the average income to average real estate price. It makes no sense if you measure it in CPI. If inflation was 2% a year, why are we seeing 6% increase year over year in the last 40 years in real estate prices? Right? But anyone who's not looking for a price, this chart over here is irrelevant to them because it's not in their basket of goods. You see my point? We're in something called financial repression, which is a fancy economic term that economists use for saying that the interest rates are being suppressed, but the government's letting inflation run hot, which is basically a very, very slow, manipulated way by the government to steal money from savers, right? Which is the people who pay down their mortgage, but because they're afraid of interest, right? So I was reserving my judgment for where we are, but all this announcement of inflation being transitory and now they're letting it run hot and transitory is, indefinite. I'm 100% saying their intention is to keep the economic state in a financial repression situation, right? If you really want to learn more about it, Google it. This is exactly what happened after World War II. Unfortunately, it's been slowly happening since pandemic, and I've been reserving my judgment, but now the CPI talk is just so ridiculous. I'm saying it. We're in financial repression. But the problem is, if you look at the first symptom of financial repression, asset prices such as real estate, stocks, and Bitcoin, all the other stuff, they go up, which is exactly what we saw last year. All you have to do is just look at the real interest rate, which is the current rate minus inflation, right? We're negative right now, which means borrowing money and leveraging up is actually smart. Not to say you should go crazy and leverage up to buy any real estate, right? This is why I recommend buying cash flowing properties, because they pay for themselves so you can weather the storm, right? So this is getting very more technical to how weather the storm on this financial repression situation. But if you want to learn more about this or see how you can kind of, protect yourself from all this craziness, you can book a call with me using the link here, www.chavzan.com. Look, I've ranted long enough about this in this episode. You can tell I'm very passionate about it, right? But I hope you take away something from this episode. My only hope is that you really think critically about what the heck is happening in this crazy economic standard, right? Because if you finally understand what's happening and how it's ultimately affect you, you'll be like, oh, this is crazy. You got to do something about it, right? But the interesting thing about all of this is that unless you're like a giant nerd like me, and my wife tells me all the time, this is a very boring topic. It really is. But if you map it out in the long term, it's going to affect you really, really hardly in like 5-10 years, right? So it's not about getting rich or anything. It's just about surviving in what you have right now, because the government is slowly stealing the value of money from you, and you have to do something to protect what you have right now. It's not even about getting rich, right? So hopefully this kind of gives you an idea of how I'm perceiving a lot of these assets right now. It's not like, real estate's going to be a bull. It's just I think the opposite end of it is probably even worse, right? So hopefully this helps. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.